Okay, hello everyone. My name's Clarke Towson. I want to give you a presentation today about Bitcoin. It's titled Bitcoin versus Other Assets. Um, so I put this presentation together to try to explain and compare and contrast Bitcoin with other asset classes that are available. So I'm just going to bring up the presentation now, and I'm going to talk through the slides. And if you've got any questions, if anybody has any questions, please post them in the chat. Okay. Alrighty. So, Bitcoin versus other assets. This is not financial advice. Please take this as general advice only. Digital scarcity. Bitcoin is the world's first asset with true scarcity. It has a fixed supply and it cannot be inflated away. True digital scarcity could only, true asset scarcity could only be achieved digitally. Store of value. Each and every one of us has got the same problem. And that is, what do we do with our money so that it's not inflated away by the actions of powerful institutions, such as the central banks and the governments of the world? The fiat monetary system as a way of keeping the rich rich and the poor poor. And the best financial asset, the highest demand, non-financial assets like houses and land, are generally owned by wealthy people. Now, Bitcoin is what's known as an emerging store of value. There's not enough Bitcoin, for example, if every millionaire in the world wanted to own one. There will only ever be 21 million Bitcoins, whilst there are almost 47 million millionaires in the world. Store of value. So, on the left here you see this picture about inflation. 1928, 1996, 2017 and 2020, you can see a basket of goods there. And what a $20 US note used to be able to buy in each of those years. And as you can see, the amount of goods from a supermarket basket has reduced considerably of what that $20 can buy. To the point where in 2020, the world went through a program of quantitative easing, which is central banks printing money. Whereas with Bitcoin, as you can see, one Bitcoin from the year 2011, 2013, 2017, and up to 2020, one Bitcoin could buy an ever-increasing amount of goods, to the point where in 2020 it went exponential. And we get the results of what we saw with Bitcoin at a current price of about 42,000 Australian dollars. So the middle class mostly invest in real estate. That's home ownership. And that's a national obsession here in Australia. Generally speaking, Australians own houses that are way too big for their needs. And the reason they're buying such large houses on land is because they want the store of value aspects of real estate, the scarcity aspects of real estate. Houses have appreciated at a rate greater than inflation over a long period of time. Houses, investment properties, land, and so on, however, over the long term, will not beat Bitcoin as a store of value over time. That's my prediction. All other assets are bleeding value. Houses have got rates, land taxes, maintenance. Stocks can be diluted by the actions of the managers and the executive team. Gold and silver, that can be increased every year. The supply of gold and silver is increased, gold by about 2% per year. So what we're all essentially searching for when it comes to our money is a place where we can, or assets that we can buy that will act as a store of value so that we can have that value into the future. Financial risk pyramid. So, generally speaking, in financial assets, the higher the risk, the higher the return. High risk is a greater potential for capital loss. As you can see there, the pyramid, at the bottom are the lowest risk assets, savings accounts, money market accounts, bonds, certificate of deposits, checking accounts and so on. Next up is the investment tools, bonds, mutual funds, index funds, stocks and real estate. A little bit further up, we start to get into speculative investments, commercial paper, options, collectibles, and right up the top, the highest risk assets being futures. So, as we go up the financial pyramid, increasing potential for higher returns whilst increasing risk. But where does Bitcoin fit in this model? Well, I think people are overestimating the risk with Bitcoin and underestimating its return. So, it's going to be very interesting seeing long term where Bitcoin does fit within this model. I don't think that it's at the top near futures. I think it's towards the middle to the upper range, and over time people will see, people will think that it's a very risky asset. I think people are overestimating that. So the problem with other assets compared with Bitcoin. No other financial asset has got a fixed supply, and that includes real estate. No other financial asset has a known quantity. Every other financial asset except for rare, one-of-a-kind art pieces or other collectibles can be increased in supply when there is a corresponding increase in demand. So have a think about it. What do we see when with real estate? As prices go up, more developers come in to the market, they develop more real estate, governments start releasing more land, brownfield sites are cleaned up and rezoned as residential. Former industrial land, like for example in Port Melbourne, that's where I hail from, is rezoned residential. So the existing owners of the land are diluted by the amount of incoming new supply of the asset. And what happens when demand goes up for gold and silver? Gold and silver miners come into the market, they mine more of the commodity, try to take advantage of the higher prices on offer for it. As more supply comes onto the market, prices come back into equilibrium. So there is a massive incentive when prices increase, or the price of assets increases, regardless of what the asset class is, for producers within that marketplace to come in and to produce more of the asset in question. And that holds for all the asset classes except for certain rare asset types like rare art, one-of-a-kind art, one-of-a-kind collectibles, and so on. So what about pension funds, defined benefit pension funds, government pension funds and the like? Well, these are mostly no longer available to people because they were too costly for government employers and other large employers to keep the schemes. They were basically too generous. They're a guaranteed income stream in retirement based on new entrants into the workforce that are paying tax to keep the schemes going. They're a legal kind of pyramid scheme where the older members are essentially paid by the younger members coming into the workforce. Now, a defined benefit pension scheme plus Bitcoin is an incredible asset combination for financial independence and freedom. And I can't find anyone talking about this, and I'm not sure why. But they should be talking about it because anybody who is in a defined benefit pension scheme and adds Bitcoin as an investment has got the benefit of having the income stream in their retirement from their pension scheme together with a fixed in supply scarce bearer asset, global asset, that over time what they could do, they could dollar cost average out of the asset and sell off small pieces of their Bitcoin stash over time to supplement their pension income stream. So the best strategy is to take that income stream. Very low interest rates at the moment make yields very, very low. So it's very hard to get a yield on, or a good yield, livable yield on assets at the moment. So yeah, dollar cost averaging out of small amounts of Bitcoin over time, if there's a shortfall in pension income, I think is a really good strategy. So as the value of Bitcoin increases to a $3 trillion asset, that's a $4 trillion approximately Australian dollars, over the next 3 to 4 years. So selling off 3 to 5% of, let's say, a $300,000 Bitcoin balance means that your Bitcoin will keep increasing in value despite your sell-offs and your dollar cost averaging out of the asset, which is a pretty damn good deal. So what about stocks? Well, as I was saying, executives have a lot of power and can dilute you at will whenever it suits them. They can issue more shares, and that dilutes the existing stockholders. The same thing with stocks, with precious metals and other assets, in that there are signals in the marketplace whenever the prices rise. The producers, so centralized companies, corporations, stocks, essentially, groups of people who are working to produce the product or service, can simply increase the supply of that product or service until prices go back down and reach an equilibrium. The problem with stocks is which stocks, when, why. What about index funds? As we've seen in the market, it's very, very difficult to beat the market long term, and index funds generally do better than people who are trying to pick their own stocks, picking winners, or have investment managers who are trying to do the same thing. Stocks, index funds, etc., they have their place. What I do, I buy both individual stocks, index funds, as well as Bitcoin. So what stocks do I like? Tesla, Apple, Microsoft, Google, Amazon, Facebook, Alibaba, MicroStrategy, Galaxy Digital Holdings, Square, Bitwise, Zoom, PayPal, Netflix, and Coinbase when it IPOs, Goldman Sachs. I'm a big fan of the work that ARK Invest does. Check out ARK Invest if anyone is interested in looking at what stocks they're buying and owning. It's very, very interesting. They're big on innovation plays. I like innovation as well. I like high-tech innovation. It's an area that I understand very well. Okay, Bitcoin treasuries. Can't really see that. There we go. I very much like the idea of monitoring what large public corporations or mid-sized or even small-sized public corporations are buying up Bitcoin. And I'm interested in buying their stocks. And the reason why I'm interested in buying their stocks is it's an example of a heads I win, tails you lose type bet. So if the stock does well, I get the earnings, and the market cap increases based on the earnings, and the value of the Bitcoin on the company's balance sheet means over time the market cap is going to increase as well based on that asset value. If the company doesn't do well and Bitcoin does do well, the market cap increases anyway due to the value of the Bitcoin on the company's balance sheet. It's a heads I win, tails you lose type bet. I like the idea of that. Okay, so US pennies and nickels are an example. So they're an example of an investment where, and I like investments where my winnings are unlimited and my losses are extremely limited. US pennies and nickels are made of copper and nickel and zinc. So inflation causes the metal value to rise in dollar value. Deflation can cause the metal in the coins to fall in value, but from a financial standpoint, the coins can't fall in value below the face value amount engraved on them. So the coins have a melt value and a face value. Inflation causes the melt value to increase. You're protected by the value of the silver and the copper. So, I mean, it's illegal in the States for an individual to melt down these coins. However, they do have a melt value, and that protects an investor who buys them because of the precious metal content of the coins. The Bitcoin opportunity. So the majority of the world is not yet into Bitcoin, but everyone will need an allocation to it. The longer people are distrustful of Bitcoin, the greater the financial opportunity to profit from it until people wake up and recognize how important Bitcoin is. Now, if everybody understood Bitcoin, there would be a stampede to get into it, and at any cost, right? People don't understand the fact that we, for the very first time, got an asset that's fixed in supply and it's scarce. And it took us until we created digital scarcity to create an asset that it was truly fixed and scarce in its supply. So the fiat currency system is the system that all of humanity lives and works under. By buying Bitcoin, you're partially opting out of this system, like I've chosen to do, and many others. As more dollars are printed, or more fiat currency is printed, dollars, pounds, euros, etc. Because you own Bitcoin, you're protected from this inflation to the degree of how much Bitcoin that you own. The Bitcoin opportunity. Okay, this is a graphic from ARK Invest, and at the time, Bitcoin was a $220 market cap, and they were projecting a 14 times increase between 2020 and to 2025, up to a $3 trillion market cap. So the current Bitcoin market cap in Australian dollars is 808 billion, and in dollar terms, 3 trillion US is about 3.9 trillion Australian. So we're looking at approximately a 5 times further increase from here by 2025. That would take the price of each Bitcoin to around 220,000 Australian dollars by the year 2025. Dr. Michael Burry, from the movie The Big Short, he was made famous by the movie The Big Short. Dr. Burry made a $750 million profit for his investors and over $100 million for himself, betting against subprime mortgages during the financial crisis. He thought differently. He looked very closely into what was really going on. He thinks that he's on the autistic spectrum. So it was easy for him to have spotted what was going on. Now, many others did as well, particularly introverted on the spectrum type guys. Now, it's likely that I too am on that kind of spectrum. Now, I spot things before a lot of people do. I was into Linux early, spotted the potential of the internet in 93 and 94, saw the potential of domain names as assets, spotted Apple and Tesla as huge opportunities. I also noticed when the majority of people are not into something, don't trust something, have not researched something, not taking something seriously, they're not talking about something, if they're dismissive of something, or perhaps if they care too much about their image to be seen to be into something, and so on. I really take notice of that sort of thing amongst my peer group, my friends, my work colleagues, family, and new people that I come into contact with. I get excited when the smartest people that I know are not yet into Bitcoin. Now, if the smartest people have not done their homework, then the average person certainly hasn't. And this represents a massive opportunity to front run almost everybody else into the asset. And that includes large corporations, hedge funds, pension funds, central banks, and governments of the world. Okay, the Bitcoin stock to flow model. Plan B came up with this model. He's a quant, and he published this model. It's still on track. The model predicts around $110,000 Australian Bitcoin price by May of this year, 2021. So what's that? About 4 months away? So yeah, we're still on track. Still looking good. Now, Bitcoin is the fastest appreciating asset. And it's very interesting that in comparison to other assets, how quickly it has increased. So I'm just going to show you in this video here. What that's showing is other assets, stocks, in comparison to Bitcoin. You see Bitcoin takes the lead starting in June of 2013. It's the fastest horse in the race. Right? No stock, no centralized corporation, no other asset on earth has been able to match the returns of Bitcoin over time. That's held true from 2010 to 2019 and will likely to continue to hold true over time. You see there, that's Ethereum that briefly overtook Bitcoin in terms of its value. And that started to fall off as the monetary properties of Bitcoin were more widely known and understood. People understood the value proposition, bought more Bitcoin, and so it goes. So yeah, fastest appreciating asset in history, actually. Okay. Why Bitcoin? Block reward halving. Last halving occurred last May 2020. Supply shock. 3 large companies are currently buying up the entire supply from the Bitcoin miners. Square, PayPal, Galaxy. These large corporations are buying up every Bitcoin that is mined per day, around about 900 mined per day, that come into the market, and just 3 corporations buying them all up. It's really interesting. You see there that over time, it started off as a block reward halving of 50 BTC for the miners. 4 years later, become 25. 4 years later, become 12.5. Now, 6.25 Bitcoins per block that's rewarded to the miners for processing the transactions on the Bitcoin network and adding them to a block and adding that block onto the blockchain. And you see that after each halving, we have large parabolic run-ups in the price of Bitcoin. That started to happen again. We're about 9 months after the last halving, which was in May 2020, and a big run-up is about to begin. Supply shock. Very interesting times for where Bitcoin is going to go over this year. As I said, the block reward halves every 4 years, and it's an example of quantitative tightening. Fiat currencies have been quantitatively easing due to the coronavirus pandemic. In other words, money is being printed into oblivion, or fiat currency is being printed into oblivion, which means it takes more dollars to buy scarce assets and everything else. Why Bitcoin? Fixed supply asset, no central authority in control of Bitcoin. It's decentralized. Nobody can increase the supply of Bitcoin ever. Now your choice is to stay in fiat currency, and that is being increased in supply constantly by people other than yourself that you've got no control over. Or you can buy Bitcoin, convert your money to a fixed supply asset that's got absolute scarcity, which cannot be inflated away by a central authority. Absolute scarcity is digital. Digital scarcity, the first asset class that exists as a global monetary good to ever achieve true scarcity and a fixed supply. That's an incredible achievement if you think about it. Why Bitcoin? Well, the world's coming for Bitcoin. Everyone needs an allocation. That includes you. Everyone who's watching this presentation is going to need Bitcoin in the future. The large institutions are buying up as much as they can get their hands on, and they're putting it into deep cold storage for the long haul. People with the hardest money over time win. Look around. Look at your colleagues, your friends, your family, your competitors. If they own Bitcoin and you don't, they gain an advantage over you. So they own an asset that's harder than the assets you own, which means that over time their assets increase at a higher percentage compound rate. So in theory, at least in theory, they could buy your time, your labour value, your assets a lot easier than they can buy your assets or time. So tribes throughout history that have owned harder forms of money were able to buy up the goods, services and produce of tribes that own less hard money. And these tribes gain an economic advantage and were able to conquer the tribes that used money that was less hard. Examples? Some tribes use seashells. The seashells are abundant by the seashore. Some tribes use beads. There's examples throughout history of Europeans counterfeiting the beads and gaining advantage over tribes, and so on. Why Bitcoin? Most financial advisors don't understand it and can't recommend it to you. Those who do understand Bitcoin have got a great advantage over those who don't understand it. That's why I'm here, to try to explain it to everyone. Now, I'm a technologist. I was the first in my peer group to understand Bitcoin, understand its potential, appreciate its design, predict the game theory that would play out, and I raised the alarm to the people I care about, and that includes each of you if you're watching this presentation. Large corporations are buying Bitcoin as a reserve treasury asset. Big pension funds, hedge funds, and so on will be next. After that, a central bank will buy it. One of the central banks of the world will buy it. Believe it, it's going to happen. And that'll be a signal to other central banks that they'll need to buy it too. Then governments will get in on it. And they'll be forced to own it as well. Why Bitcoin? It's still in the early days for Bitcoin. We're only 9 months after the third halving, with many more halvings every 4 years to go before the year 2140. Remember what a halving is. It's a reward to the miners on the network for adding all the Bitcoin transactions that occur on the network to a block and adding that block to the blockchain. Remember what the blockchain is? It's an immutable ledger. Everyone on the network is participating in the Bitcoin network. It's got a copy of the ledger. You can see all the transactions that are taking place or have taken place. It's written on stone. It's written on the blockchain. So let it be written. So let it be done. The higher the price of Bitcoin goes, the less risk there is in investing in it. Higher price means more buyers, means more miners, means a higher hash rate, which increases the security of Bitcoin, and so it goes. So don't underestimate Bitcoin, my friends. It's here to stay. It's a pristine asset to hold as a reserve treasury asset. You need an allocation to Bitcoin. It's a must. Don't be under any illusions. The global herd is coming and they want your Bitcoin. So take the time to understand it. Way to win is to dollar cost average and buy Bitcoin every fortnight when you get paid. If you need to sell, do the same thing and dollar cost average out of Bitcoin over a long period of time. Don't try to trade it. Don't try to time the market. Any of that stuff, because you'll lose. Right? You want to hodl Bitcoin for the long term. Dollar cost averaging, buying, and dollar cost averaging, selling. Okay, this is a couple of graphs I put together. So back in 2017, the graph on the left there, you can see the human population of the planet. It's about 7.6 billion. It's around about 5 million Bitcoin or crypto owners at that time, which represented a tiny fraction, 0.07% of the world population. And we get the graph on the right. 2021, approximately 100 million crypto users worldwide. There's a Cambridge study that comes out every year that studies this sort of stuff. We now have a population of about 7.8 billion worldwide. With 100 million crypto users, that represents about 1.28% of the world population. And then smack bang in the middle of this middle of the screen, you see here Bitcoin owners as a percentage of the global human population projected in the year 2025. 500 million crypto owners out of a human population projected of about 8.184 billion people. And that would represent about 6.11% of the global population, planet Earth. So you see the opportunity from 2017, which I spotted early, 0.07%, has increased to 1.28%. Big increase. Another big increase between now and the year 2025. Now, the interesting part is what I foresee coming. Remember, there's a block reward halving every 4 years. In the year 2024, the block reward will halve again and will be down to 3.125 Bitcoins per block. It's rewarded to the miners processing transactions on the Bitcoin network. I foresee a global stampede. Because what happens in 4 years' time when the population of the planet increases to 8.184 billion and the number of Bitcoin crypto owners goes up by a factor of 5 times, and all of them are clamoring to get their hands on Bitcoin, a fixed supply asset, which is again, as I said, gone through that block reward halving. High global demand, diminishing supply, 450 Bitcoins per day global supply at that point, at the next halving for the miners, all being purchased by large institutions, very few left for anyone else. 4.5 million Bitcoins lost. Satoshi stash unavailable. Under 4 million Bitcoins, that's how much I estimate will and are available at any one point in time for the entire 8.184 billion 2025 projected population of the planet. So we're going to see massive increases. It's simple supply-demand economics. As you can see there, 0.0004 Bitcoin are available for each person on the planet in the year 2025. 0.008 Bitcoin available for each person of 500 million projected crypto users on the planet by 2025. In the future, people who own a whole Bitcoin, or a whole coiner as they're known, they're going to be extremely rare in the future. Owning a whole Bitcoin will be a high status thing. Multi-whole coiners, i.e. people who own one or more Bitcoins, will be exceptionally rare. Very, very exceptionally rare. So you can see we're still early. And that pie graph is going to, where that orange section is, the number of people who are into Bitcoin will expand considerably over time. Bitcoin Rich List, the distribution of Bitcoin owners, it's very interesting because whilst addresses are not people, it's still very interesting to see how many Bitcoin addresses are richer than $100,000 US. About 330,000, 309 Bitcoin addresses on the planet, richer than $100,000 US. Now each Bitcoin wallet is able to generate many different Bitcoin addresses that correspond to that wallet. So we can't say for sure in terms of how many people own that amount of Bitcoin or more. But it's still an interesting thought. By my calculations, and after looking into it for some time, owning 5 Bitcoins places a person in perhaps the top 1% of the entire global population, or higher. This is the thing. A whole Bitcoin is clubbing together. That is an incredible financial opportunity, great financial clout. If somebody owns 5 Bitcoins and they know somebody who owns 5 or maybe 10 Bitcoins, a small group of people clubbed together, they're able to do some interesting things. Okay, fear, uncertainty and doubt. Mainstream media is bought and paid for by very powerful institutional interests. So my advice is do not listen to the fear, the uncertainty and the doubt of the mainstream media. There's so many negative news articles out there about Bitcoin. Your fear, you're selling. It's bigger players who are buying up your scarce fixed in supply Bitcoins on the cheap. Now Bitcoin is the first opportunity for the little guy or lady. It's the first time the little person has had the opportunity to front run the biggest, nastiest corporations and institutions on the planet. Don't be under any illusions either. They want your Bitcoin. Just a reminder to everyone, I run a Bitcoin consultancy business. Check out my website at intjbilling.com. Be happy to have you as a client. Have a read through there what my list of consulting services are. And I look forward to any of you who might want to come forward and have me set you up with Bitcoin and get you started and provide you advice on how Bitcoin works and to get you completely up and running. On my website, at this link here, there is a spreadsheet that I've created. It's free to download by anyone in the world, and it's got the best Bitcoin speakers in it. It's a world-class Bitcoin education for free to anyone who wants it. That's it from me for this presentation. I hope that you've all enjoyed it. I've certainly enjoyed giving this presentation, and just remember, Bitcoin represents an amazing opportunity, and the reason I went into this business of Bitcoin consulting is because I wanted to help people to understand what Bitcoin is, how it works, and to get on board with it before the majority of the world and the large institutions are on board with it. because I like the idea of the little guy winning for once against the might of large corporate and central banks and other government interests and the like. So don't underestimate Bitcoin, and I wish you well in your Bitcoin journey, and I hope this presentation has been interesting for you. All the best. I'm Clarke Towson.